Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were keeping an eye on the 1967.5 key level, and depending on where ES was trading in relation to that, it would give us a very good idea on which side was being more dominant and which side was in control. Overall, we knew that the buy side was being pretty dominant, but holding above 67.5 would just confirm that idea, and that would bring the 74 quarter to 76 quarter resistance zone into play, and then potentially the all-time high. And we can see in the overnight session, as soon as we moved away from 67.5, we just got some continued buying all the way up to that 74 quarter to 76 quarter resistance zone. At this point, heading into the day, the main resistance is here at the all-time high, 76 to 78 quarter, and on the downside, we have the initial support zone at 67 quarter to 69 quarter, which is the key inflection point on any pullback. Now, if this market is gearing up to make a new all-time high, then ES should hold above the initial support zone. But heading into the day, we have Econ out at 9 a.m. Central, and then we have Apple and Microsoft reporting earnings after the close. And because of that, I don't think that this market's really going to make a big breakout move ahead of those earnings, or at the very minimum, that potential is low enough that you definitely want to be careful on the long side up here. Now we know that the buy side has been dominant, and we know that the overnight session is so far very bullish, and we know that this could lead to a break above the 78 quarter all-time high and lead to new highs. Nasdaq already made a new marginal high on the year in the overnight session, but you really have to question what the upside potential is from this point forward ahead of Apple and Microsoft earnings, right? And for that reason, it makes sense to be a bit careful here and not really get caught up in this short-term emotion of the market trading near the all-time highs. And from what we can tell so far, it seems like it is gearing up for a breakout to a new high, but given the context of Econ at 9 a.m. Central and then Apple and Microsoft reporting earnings after the close, it just seems unlikely that there's going to be a sustained breakout. That doesn't mean that we can't test the 78 quarter or even make a marginal high on the day time frame, but unless that happens on really heavy volume and some really good momentum, it could just kind of stall and rotate back into this recent range and just not really go big one way or the other until after the close in the Globex session or heading into tomorrow. So for that reason, even though our bias is short-term bullish, we do want to be very just really aware of the trade location and make sure that we're getting in at a good inflection point. And at the same time, if the trade is not working right away, that means we could get a pullback down to 67 quarter to 69 quarter. This is a good spot for buyers to step in on any pullback. If the market is really strong, then it may not even reach all the way down back into this zone, and we may just balance above 1970, 71. But in that scenario, we could actually get a breakout and just kind of build a marginal high, balance, and then get a sustained move after the close. And after the close, because it is a catalyst on earnings, that move could be to the downside or the upside, right? So far, all the signs are pointing to an upside break, but with the catalyst being after the close, it could go the other way too. So we have to be prepared for that. But on the day time frame, the idea is that because of those catalysts scheduled for after the close, we're not going to get any huge trend type day. But if it starts developing into that and it's happening on above average volume and the internals are showing a lot of strength and the tick is holding above zero, then you can certainly look for long setups even at some aggressive prices, but then you have to be very careful on trade management, right? So the conservative idea is to kind of sit back, wait for the market to pull back to a good price, where you have kind of that instant price edge. That's going to be around 71 quarter, 70, something like that, potentially initial support. Try the trade, take the scale, and if it starts working, you can hold a position back up towards the initial resistance zone. But if it starts balancing and kind of just not really going anywhere, then you want to be aware of the context that, this is a day where you might not get a big directional push, and you want to bail on that trade. On the downside, again, the initial support zone, very key area. If we balance for a bit ahead of it, let's say for a couple of hours and then break lower, then of course you will have to be a bit careful. At initial support, we have the gap fill at 66.25 right below that, and that's why if we balance for 2-3 hours ahead of this zone and then come down into it, then you have to be careful and you might want to look for bottom of zone or even the gap fill. 63.75 prior VPOC. I'm just putting this on here as a reference level. I don't really expect this level to provide much edge. If the market heads down there, that would short term be bearish, and for that reason, it's just a reference level. It's not something that I plan on trading. Below it, we have some support, 62.5. That's a better level, and of course, 58.25 to 60.25 is a pretty key support zone at this point. But if the buyers are going to maintain control, then we should not even head down to the zone. So on the day time frame, I do want to see ideally this initial support zone holding if that buy side bias is going to remain intact. And if we break below it, then you got to start being a little more careful on the long side, because a really strong market would not pull back all the way down to its overnight lows and down to 65, 66. So heading into the day, we know the buy side's in control. We're going to focus more on long setups. I don't feel like fading the market at so close to the all-time highs. That's not really the way we trade. So the focus is going to be on identifying good spots to take longs, but at the same time being patient and only taking it if you're getting really good reward to risk and good trade location where there are very high odds of at least a rotation or a bounce. And if we don't get that, then we're just going to sit out, right? I mean, this market's trading near all-time highs. We have econ, we have earnings. There's a lot of reasons to be careful in this market at these all-time highs and not really get caught up in any overly positive emotion that might kind of get you in. One problem with a market that's near the all-time highs is that you feel like you're missing out on the move, that this market is kind of running away from you. So I think it's really important to control that fear of missing out, and just by being aware of it, you can actually get a pretty good handle on that. Once you're aware of an issue, it's much easier to deal with it. So, just keep a check on that. Fear of missing out, chasing, being a bit too aggressive right at the all-time highs when the context suggests that, a sustained move is going to happen either later in the afternoon or probably even after the close. So those are the main thoughts heading into the day. Let's see how well the buy side holds up off the open and take it from there.